Hello and welcome back. And today I'm going to show you once again how to trade gold and silver in a way that gets maximum profit and something you can do continually, consistently with an actual skill that's not just luck, but based on something that you know is true about financial markets. So let's get started with that right now. When I'm thinking about showing people how to trade gold, I think back to a time not too long ago in July and August of 2011. We were right about here on the charts, and it was right at that time I was a member of a fairly popular investment group and a group about entrepreneurs and business investment, and I saw the leaders of this group say at that time, I would like to invest all of my portfolio into gold, but I'm only going to allow myself to invest 40% of my portfolio in gold because gold is the thing that we really need to invest in most. And this is the time to invest in gold. And then right at that time, that's when gold stopped going up and turned and started going down. And then it continued to go down for the next 4 years and didn't even begin to start the recovery process until back in January 2016. And that's when it kind of started the recovery process. And then if you notice, it never did get back to that price until just recently in July of 2020. And it momentarily broke through that level and then started to go down again. So even to this very day, anybody who invested in gold at that time has lost money, and actually lost a lot of money. Or how to identify the places where you would choose to go long or go short based on understanding basic financial market behavior. So back in 2011, I was seeing on the charts a clear opportunity for shorting. And I felt like, can anyone else see the same thing that I'm seeing? I'm seeing the signs. Can anyone else see the signs?
What? You think the stock market's some great mystery beyond the realm of human understanding? Didn't you see the signs? I saw the signs.
Well, ironically, now we're back to a point where there may be another buying opportunity on gold. And if you look at the charts, I realize that there are people all over the world who are looking at charts, and apparently most of them can't read the basic behavior, known behavior of financial markets. But you can see that this behavior that gold has been forming here is a distinct and known behavior pattern. It's something that has been known throughout all of history of financial markets. It's not a trend. This is a distinct pattern. Each of these sections on here has a distinct shape that you can see is none of it is a trend. It's a correction to the previous uptrend. And there is a distinct pattern that corrections tend to make triangles and patterns that often end with an A, B, C, D, E shape. And I'm just looking at this E section of this and noticing how it has the same behavior pattern as the C section back here. And if you look close, you'll see what I mean. It's A, B, and then 1, 2, 3, 4, 5 of C. That's what we have now. A, B, 1, 2, 3, 4, 5 of C. The other thing that has been very critical, something that has given new insight into how to trade gold, is just using silver as a tool to help trade gold. So there is a distinct pattern on silver. Right now at this time, this pattern can only be one pattern. It's an ABC shape. If you know the difference between a trend and a correction, impulsive versus corrective price action, if you have learned from looking at charts, you ever saw a chart, you ever looked at the financial market before, you would know that there is a distinct shape, proportion of an ABC compared to a 1, 2, 3. I often demonstrate pretty much every day in our live sessions to show people over and over the difference between an ABC shape and a 1, 2, 3 shape, so that in most cases you can tell at the time when there's only 3 waves if it's an ABC or if it's a 1, 2, 3. So right now on silver, we have, if I go down to the 8 hour, you will see the perfect shape of the 5 waves of A. And then I don't really need to focus on the counting of this, but I believe it's an A, B, C, B, and C. And so that makes this a V. And there's a distinct shape, like you cannot not see it. There's no way you can not see a V. And then 1, 2, 3, 4, 5 of C. Now this looks like 1, 2, 3, 4, 5, 6, 7. That's what happens when the timing is not quite right. They're still going to put the stimulus package to the Senate and then to the House and then signed off by the president. There's a few steps, and then that's when I think gold is going to take off and go up. And since this video is not being made live, I'm doing live trading sessions every day, twice a day, but this video is not being made live. So by the time that we edit this video and get it uploaded, I don't know if this might have already happened, but just know that what I'm not trying to do is help someone win the lottery on one trade.
We won! You got all 6 numbers! Yes, we won!
What I am really focused on doing is helping people who really want to learn to master the skill of trading by reading markets and doing pretty much the same thing over and over, day in and day out. Not trying to get lucky on one trade, but having consistent skill that is demonstrated over long periods of time. And that's the thing that gives me the most fulfillment and satisfaction, is to see other people be able to pick up that skill and apply it and change their lives as a result of it. So if you don't happen to get this and you were thinking that you might win the lottery if you knew the right time to buy gold, well, just know that we're not looking to get lucky. When you accept the risk of a trade, just know that if this now on gold or silver makes a corrective pattern up relative to this move down right here, and then it completes that corrective pattern up, I'm assuming it's not going to make a corrective pattern up, and then it goes down and takes out this low, then that would, all bets would be off for a long-term long entry. It would be over. You accepted the risk, and that's what would happen to invalidate that. So now you know if that happens, then this trade would be off. But the probability is now pretty high that it isn't going to do that. That's what I'm seeing. I'm thinking it's pretty high that it's going to go up. So if you do happen to see this and then you see that it did that, just know, as all these other examples that we have shown in the past, it's not a coincidence. It's based on reading markets. Just like recently on the dollar, as most of you know, we stalked every piece of this dollar, not trading it on the dollar index, this is dollar index, but trading it on the euro, since that's available and is a currency pair in the opposite direction. But we identified this point as the end of a correction, right exactly at that point. No other time, no time before that, no time after that, just one point right there. And it was easy to identify that, enter that, and ride that all the way down to the very bottom. And look at the perfect shape of that. It was so clear, and we entered this on a Friday, stayed in through the weekend, added another position on a shorter time frame right here. So we had 2 positions going down and then exited down here. Entered a third time after closing out those positions and entered a third time over here. And then ended up going long right in here. There's specific reasons you can't see it all just by showing this one chart. But if you're involved in our daily trading sessions, you will definitely pick up on the specific type of skill and visual recognition that you can see on charts and be able to do it yourself. So if you'd like to know more about what really works in trading, go to tradingmastermind.com and sign up for our free training series just to help get you started. Now, if you didn't see the previous videos I made about how to trade gold, you can now watch those right over here.